traditional haven currencies, such as Japan's yen and, to a lesser extent, the Swiss franc, were on the rise on Wednesday as trade and geopolitical concerns came back into focus and the sell-off in high-yielding emerging markets assets intensified. President Donald Trump on Tuesday said he wasn't happy with how trade talks between the U.S. and China were progressing, and said the much-anticipated U.S. North Korea summit planned for next month in Singapore might not go ahead as planned, which sent ripples through global financial markets. The Japanese currency USD JPY, minus 0.39%, rallied 0.9% against the U.S. dollar on Wednesday, breaking through the 110 yen per buck barrier, and jumping 1.5% against the Euro EUR JPY, minus 0.11%. The Swiss franc, which is also considered a haven currency though its moves tend to be more muted, rose 0.5% against the EUR CHF 0.0000%, but the franc dipped against both the U.S. dollar USD CHF minus 0.2812% and the CHF JPY minus 0.12%, implying that the yen remained the haven currency of choice. The important point about the yen's strength is that it may not be best to understand it as a safe haven demand, but rather as the unwinding of a short yen carry trade, wrote Brown Brothers Harriman currency strategists Mark Chandler and Winton. The yen's use as a financing currency is the key and not the attractiveness of Japan's asset markets. If investors sold yen to buy higher-yielding M currencies, like the Turkish lira, for example, the unwinding of these trades would lead the yen to strengthen. Don't miss, emerging markets feel the pain as dollar, treasury yields rise. Emerging markets currencies had already been selling off, making market participants pay attention to risk developments. Many emerging economies rely on foreign funding, so the stronger dollar, as well as rising interest rates in the U.S., are causing pain for the likes of Turkey and Argentina, which are the current prime examples of dollar-dependent M borrowers. The M sell-off changed everything, beating the dollar into a carry trade unwinding frenzy, wrote Ashraf Lady, strategist at Intermarket Strategy, in a blog post. Indeed, besides using yen, investors would also fund N investments with U.S. dollars, and backing out of those positions drives the buck up against its M rivals. Argentina's peso USD-ARS, minus 0.0029% dropped to a historic low against the greenback earlier this month, while the Turkish lira USD-TRY, 1.4641%, dropped to a record low on Wednesday. As both countries are especially reliant on foreign funding, they have become the poster children of this M drama. Read, Argentina may be headed for another currency crisis. See, Turkish lira hits historic low as Erdogan eyes control of country's central bank.